Harley-Davidson just reported a 60% collapse in motorcycle revenue. Let that sink in. The iconic American brand shipped 53% fewer motorcycles compared to last year. And they're not alone. The entire motorcycle market is in freefall right now, with US sales down 9.2% through June 2025. But here's what nobody's talking about. This crash isn't just about numbers on a spreadsheet, it's about what happens to riders like you and me. The evidence is undeniable. Let's start with the hard facts. Harley-Davidson, the company that's been the backbone of American motorcycling for over a century, is in serious trouble. Their Q2 2025 numbers tell the story. Revenue down 19% year over year to $1.31 billion. Global retail sales down 15%, with North America down 17%. Operating income margin dropped from 14.7% to 5.9%. Motorcycle shipments decreased 28% in Q2 alone. And it's not just Harley. KTM, one of the biggest European manufacturers, just entered self-administration with 2.9 billion euros in debt. That's over $3 billion. They've already announced 500 layoffs by year-end and completely paused production operations back in January. This is the largest insolvency procedure in Austria this year. Think about that. A major global motorcycle manufacturer essentially declaring bankruptcy. But I know what you're thinking. I've heard this doom and gloom before. The motorcycle industry always bounces back. Not this time. The numbers don't lie. US motorcycle registrations, which had been climbing steadily for years, suddenly dropped from 9.8 million in 2021 to 9.5 million in 2022. California, which leads the nation with over 936,000 registered motorcycles, is seeing dealerships close their doors for good. And across the pond in Europe, motorcycle sales are down 11.3% in the first 5 months of 2025, with total sales at just 669,722 units. This isn't a blip, it's a crash. And understanding why it's happening is the key to figuring out what it means for you. Why this is happening now. So what's causing this collapse? I've identified 3 major factors that are creating the perfect storm. First, interest rates have skyrocketed. Remember when you could finance a new bike at 2 to 3%? Those days are gone. Current rates for new motorcycle loans are running 6.24% to 7.99%, depending on the term. Used bikes? Even worse at 7.24% to 7.74%. When financing costs nearly triple, suddenly that $20,000 Harley or Indian becomes a lot less affordable. Monthly payments that were manageable at 3% become budget busters at 7%. Sure, manufacturers are trying to counter this with promotional rates, some as low as 0.99%. But those deals are getting harder to qualify for, and they're usually only on specific models they're desperate to move. The second factor is demographic reality. The core motorcycle buyer in America has traditionally been men in their 40s to 60s. That's us. But our generation is aging out of riding, and younger riders aren't replacing us at the same rate. The average age of a motorcycle owner in America is now over 50 years old. And for Harley specifically, it's even higher. The company built its empire on baby boomers, but that generation is now hanging up their keys. And the third factor? The economy. Despite what you hear about low unemployment, middle-class Americans are feeling the squeeze. Inflation has eaten away at purchasing power, and discretionary spending, the kind you use to buy a motorcycle, is down across the board. When people are worried about affording groceries and gas, that new bike gets pushed way down the priority list. But there's another factor that nobody's talking about, and it might be the most important one of all. The hidden crisis in dealerships. Behind the scenes, there's a crisis brewing in motorcycle dealerships across America. I spoke with dealers in 5 states, and they all told me the same story. Inventory is piling up. Bikes that would have sold in days are now sitting on showroom floors for months. One dealer in Texas told me he has Harleys that have been sitting for over 300 days, unheard of in previous years. Manufacturers are pressuring dealers to take more inventory than they can sell, creating a dangerous financial situation? Many dealers are leveraged to the hilt with floor plan financing costs eating away at their margins. And here's where it gets really concerning. Repossessions are starting to spike. When riders can't make their payments, those bikes come back to the lenders, who then dump them at auction, driving down used bike prices. This creates a vicious cycle. As used bike prices fall, new bike values take a hit too. Why buy new when you can get a barely used model for thousands less? Dealers are caught in the middle. They can't lower prices too much because the manufacturers won't allow it, but they can't move inventory at current prices. So they're stuck with aging inventory that costs them money every day it sits. One dealer in Pennsylvania told me, "I've been in this business for 30 years, and I've never seen anything like this. We're fighting for survival." And that brings us to what this all means for you. What this means for riders. If you're a rider, this market crash has major implications for you, whether you're looking to buy, sell, or just keep riding what you have. First, if you're in the market for a new bike, you actually have more leverage than you've had in decades. Dealers are desperate to move inventory, and while they might not advertise it, they're more willing to negotiate than ever before. I'm seeing discounts of 15 to 20% on new bikes if you're willing to haggle. And manufacturers are offering incentives like free accessories, extended warranties, and low-rate financing to move metal. But here's my advice. Don't rush. This market is likely to get worse before it gets better. 6 months from now, that bike you're eyeing might be even cheaper. If you're thinking about selling, however, the news isn't good. Used bike values are dropping fast, especially for high-end models. That Harley or Indian that was worth $20,000 last year might only fetch $15,000 today. If you can hold off on selling, do it. This is a terrible time to try to get top dollar for your ride. But what if you're happy with what you're riding and have no plans to buy or sell? You're still going to feel the effects of this crash. Parts and service could become more expensive and harder to find as dealers close or cut back. Riding communities might shrink as fewer new riders enter the sport. And manufacturers might reduce their model lineups, focusing only on their most profitable bikes. The good news? The aftermarket might actually improve. As manufacturers struggle, aftermarket companies often step up with more innovative products at better prices to capture those riders who are keeping their bikes longer. The opportunity in crisis. Now, I don't want to leave you thinking it's all doom and gloom, because in every crisis, there's opportunity. If you've always wanted a high-end motorcycle but couldn't afford it, your chance might be coming. As this market correction continues, expect to see some incredible deals, especially on used bikes. I'm already seeing 3-year-old Harleys selling for 40% less than their original MSRP. That's unprecedented in the motorcycle world. For the patient buyer with cash in hand, the next 12 to 18 months could be the best buying opportunity in a generation. There's also an opportunity for community. As the industry contracts, the bonds between riders become more important. The clubs, the rides, the gatherings, these become the backbone of motorcycle culture when the commercial side of the industry is struggling. And for those with an entrepreneurial spirit, there will be opportunities to fill gaps in the market. As big dealers close, small service shops can thrive. As manufacturers cut back on customization options, aftermarket builders can step in. The motorcycle industry isn't dying, it's transforming. And those who understand what's happening can position themselves to thrive in the new reality. So where does all this leave us? The motorcycle market is undeniably crashing. Harley-Davidson's 60% revenue collapse and KTM's 2.9 billion euro bankruptcy aren't anomalies. They're symptoms of a fundamental shift in the industry. For riders, this means both challenges and opportunities. The smart move is to understand what's happening and make informed decisions based on your personal situation. If you're buying, take your time and negotiate hard. If you're selling, hold off if you can. And if you're just riding, cherish the community and culture that makes motorcycling special, regardless of what's happening in corporate boardrooms. The road ahead might be bumpy, but riders have always known how to handle rough terrain. We adapt, we overcome, and we keep the rubber side down. If you found this analysis helpful, hit that subscribe button and drop a comment below with your experience. Are you seeing these trends in your area? Have you bought or sold recently? I want to hear your story. Until next time, ride safe and remember, in chaos, there's always opportunity.